see if we can throw this out to YouTube too here. Try to get everybody in on it. All right. I'll pop up the track record and kind of go over it a minute, a little bit. Not a lot of it, but a little bit. Watch is not right at all. Awesome. Happy New Year. All right. How many people have no idea what Knoxville Trade Club is? If you have no idea, let me know in the chat. You aren't even sure what it is. No idea. All right, that's cool. No, I got a few no ideas. No idea, not sure. All right. Don't guess if you don't know. Don't guess. We're gonna go through a little bit. If you have any, like, if you have no clue what Knoxville Trade Club is, tell me you have no clue. No, not sure, no clue, aren't sure what we do. It's not credit spreads. It's not, has nothing to do with Rob Booker. I live in Knoxville, so it has nothing to do with, that's just a coincidence that Rob Booker calls Knoxville divergence, Knoxville divergence. I just want to know, like, how many people I got here that have no idea what the Knoxville Trade Club is all about, because it is 2 o'clock, so we're gonna get started here. Looks like we have a handful of people have no idea what Knoxville Trade Club is, so welcome. Let's go ahead and talk about risk warning. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational and educational only and is not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, consult a financial advisor. Preferably yours, but you can consult one. All right. So pick of the week, we'll go through that. But first, we need to talk about what in the devil this is so that you can maximize the advantage of the pick of the week. So we'll get to the pick of the week in just a minute. Let's see, gotta get out of this thing. I need to load up. We're gonna do the master class, the first master class, since I got some people in here that have no idea what we're even talking about. So let me grab the first master class. 2, 3, 1 right there. All right, so the mechanics of this trade. This is a covered call, and I'm going to discuss what a covered call is. If you don't know what a covered call is, it's a level 1 options trade. We're going to go through it. Now, for the Knoxville trades, we put a little twist on it. It's not just your standard out of the money covered call. We actually go in the money and sell our call. And lo and behold, we get paid to do this, and which gives us downside protection in the trade. So you don't even have to pick your direction correctly and still make your money. Typically, we're going out a week. Today, I plan on discussing a few longer term trades and throwing them out there for all levels. This is a 3-tiered thing where you have the Silver Club, which you get basically 2 trades a month. You've got the Gold that gets a trade a week, and then you got Platinum that gets a live chat and all the twists and turns that I do on these, which there are some bonus opportunities to make extra money. So we work as a team and chat, and it does have a Discord component. We're up to 30 plus Discord channels now for all the different things I do and I'm working on and future things. So it is a busy happening place. All right, so let's go through the masterclass and just throw it out there. So this is the mechanics of a covered call, basically. It's how it works. We already discussed the risk warning. So the class layout is in 5 parts. We're just going to do the first part here today in the open house party here. So first off, you have stock. I think everybody here should know. I mean, if you got here and you don't know what stock is, well, stock is a security that represents a fractional ownership of a corporation. You know, like you buy a stock in Apple, you buy, Apple has umpteen million shares, Microsoft has umpteen million shares, Google, all these companies. And we're going to go through and talk about the pick of the day. So the first thing we have to know is the company has stock. So, I mean, like I said, stock market, stock is the fractional ownership of a company. Now, second, you have call options. Now, a call option gives the owner of the call the right to buy an underlying stock at a given price called the strike price at a certain time called the expiration. Note that the calls we are going to be that we trade inside Knoxville Trade Club, we want them to be exercised by the other party, by the owner, aka called. It gets called away. The call gets called, and we want that buyer to do it. And they can do it at any time for these companies that we're going to trade and the options we're going to trade. That can happen anytime. So it doesn't have to wait all the way to expiration. If on Wednesday morning somebody gets a wild hair, they can call out your stock and that trade closes out and you get paid the full profit. So we'll go through how that works. So second part, we have the call option. A single call represents 100 shares. So when you see the price on an option chain, you have to multiply it by 100. So if you see a call and the call option is worth 50 cents, that's actually a $50 instrument when you buy or sell it. So moving on. We plan to sell the call options. By selling, we are obligated to deliver stock to the buyer. That's why we buy the stock. So we're obligated to buy, to deliver stock to the buyer of the call in exchange for getting paid the strike price if and when they decide to exercise the call option, which, like I mentioned, can happen at any time up until expiration. And they actually have 30 minutes past the close of expiration day to decide to exercise before that call expires and does not get, they can't go back and change their mind after that 30-minute period. So now that may sound risky that we're going to sell these calls, but we're buying the shares to deliver to the buyer when the option gets exercised, which makes it makes that short call a covered call with stock. So most brokers and platforms consider this a level 1, the most basic and lowest risk options trade that you can do. And most brokers, if you have any kind of options approval at level 1, the most basic kind, like I said, you can get covered calls or buy rights, or there's a few other terms they call them. So putting it together. So how the trade will work, you would buy 100 shares of XYZ, that's just any ticker, and then sell one call option. So these do have to have options on them. You can't just go to something that has no options because it's not going to work. So you buy 100 shares, sell one call option. This order is typically done all at the same time in one order. That's the way I like to do it, and I recommend doing it because then your price is your price. Many brokers will either call it a covered call, a buy right, a covered stock, or some other, some other type of lingo. Some of them call a buy right, covered stock all in one. I mean, the lingo is kind of all over the place. So the variables in this trade are the price of the stock, the strike of the call, the price of the call, and the expiration of the call. Those are kind of the different variables in this trade. Now, you may have heard that call options are dangerous, and many call options go to zero. Some over 70% of purchased call options go to zero. Their value dropping to zero is what's called theta decay. We plan to be selling those calls. So we're going to be on the side of the call structure where 70+% of the time we're going to make full profit. That's just looking at all the calls that get bought and sold, in a given time period 70% of them go out for 70+% of them go out for no money. So if we're selling them, then if we were selling that whole big chunk of calls, 70+% of ours would be full profit. And that's where we're really trying to be. So we're going to be selling those calls to make our money with theta decay. As they drop to zero, we're making our money. Now, some different lingo in the strike price. Calls can be what's called in the money, which means a call is less than the current stock price. That's the strike price. The strike price of that call is less than the stock's current trading price. Calls can be at the money, which means they're roughly the same. That strike price is roughly the same as the stock's current trading price. And then calls can be out of the money. This is for the strike price, which means that strike price is greater than the current trading price of the stock. If you're unfamiliar with options, this is just kind of a little crash course on that aspect too. So how does this work? Well, here's an example. This is just, we're going to call it XYZ. It's not a real company. We're going to buy 100 shares of XYZ at $10 each. In that same order, we're going to sell one $10 call that expires next week. In this case, it'd be January 7th. And we're going to get paid for selling that $10 call. We're going to get paid 50 cents per share into our account. So that, like I said in the beginning, it represents $50. So it's 100 shares at $10 a share equals $1,000 cost. We're going to sell that one call for 50 cents times 100 shares equals $50. So now the net debit, what's called a net debit, this is the net cost of the trade, how much they're going to deduct from our account for these shares, and this one short call is $950. And you can already see, if nothing happens by next week, we're agreeing to sell it for $10. If it's sitting right at $10 next week, we're going to get paid the strike price, which is $10. So we're going to go through this on each of the three kind of possible outcomes here. So we have 100 shares of XYZ at a cost of us to $950. We agreed to sell those shares at $10 next Friday if XYZ is trading at or above $10 next Friday. So here's outcome number one. XYZ is above $10, at or above. The call owner calls the shares. They execute their contract, and we get paid $10 a share or $1,000. So we spent $1,000, we got paid $1,000, and then we also got paid that bonus $50. So that makes a $50 gain. The $1,000 we just got paid minus the $950 net debit cost equals a $50 profit for this 1 week trade. Outcome example number two. XYZ is at $10. The call owner may or may not exercise. Usually if it's right at $10, they're going to exercise. And like I said, technically they have until 4:30 p.m. Eastern to make their decision on expiration Friday. If they do exercise, then it's just like number one, just like the case we just went through. If they don't, then we're going to go through that in just a second. With number three, XYZ is below $10, or we got left with the shares. The call expires completely worthless. We keep the whole $50. We keep the shares. We have shares at $9.50 a share cost. When this happens, usually I'll turn around on the next open market day, maybe a Monday. Sometimes it's closed on Monday and it's a Tuesday. Then we look at where the best place to sell new calls against these shares is and bring in additional money. And, there's some caveats to it. You always want to try to stay above your cost basis, whichever strike you're going to sell, you want to try to stay above $9.50 at this point, because that's our net cost in the shares. So you could, if there was a $9.50 strike, we could sell that if it was going to pay you a reasonable amount of money, or you could go with the $10 again, or you could go with an 11, 12, it just depends on where the credit is for the next week. So there is a risk that the stock drops big or something crazy happens. blah, 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 XYZ CEO is, the next news story, and the company is now trading at like $5 a share. I mean, it could be trading at $2 a share, as it says on the screen here. Yeah, this is the risk, and it can take a significant amount of time to work out of a situation like that. But you don't necessarily have to just close it and take it. You can sell, you can keep selling, and eventually work out. Now, where this whole idea came from, rewind back to the dot-com bubble in the late 90s, early 2000s. On the backside of that big dot-com pop, I bought a little company called Red Hat Linux. And it went through a few ticker changes. I think RHAT was probably the last one it had. So it was back in 2001 is the last time I bought the shares. I had a cost around $3.50 a share. I think some accounts had a $5.50 a share cost. And then I just kind of rocked along holding that for a little while. And then a few years later, in 2005, I actually learned about this process of selling calls. We're in 2021 now, so I've been doing this a few years myself. So I learned about selling these calls, and I decided that I wasn't going to sell at the money. I was going to jump up in price because I wanted to sell those calls. I jumped out in time also because at the time there were no such thing as weekly options. You basically had monthlies and quarterlies. So I would jump out there usually 3 or 4 months because that's where I could get a fair premium paid. And I'd sell those upside calls, collect that little bit of money against those shares. And by the time I sold these shares to IBM for $190 a share, I had I'd accumulated a negative $7 a share cost basis. So the whole $3.50 or $5.50, depending on which account you looked at, that whole chunk of money right there, I covered that entire bit and then made $7 more on top of that over the process of doing this over a long period of time. So no matter what, even if the shares had gone to zero, I still would have come out about $7,000 to the good, or $6,000 to the good. So, somewhere in there. So that was pretty crazy, if you ask me. Yeah, I think it was 7,000. So went out for $190 a share, 100 shares. I think the account value was 26,000. So they would have paid me 19,000 for the shares, and I had a $26,000 account. So yeah, $7,000. I made roughly a negative $7 cost on those shares. So that's pretty crazy, right? Like that you can do this over time and come out like that. So, alrighty. I guess it's actually $70, negative $70. 7,000 on 100 shares. Yeah. All right. So, in fact, during the beta test period, we bought 100 shares of SPRT. This is in the track record. We sold calls. It did a weird merger thing, and we ended up with an odd number of shares of GREE. I couldn't sell calls anymore. So this is the one loss I have in there, and I decided just to close that position. So that's the one loss that I have in the record, and we can look at it in just a minute. It was a bigger than normal loss, and I just didn't pay attention to the fact the merger was coming up that week. All right. So in Knoxville Trade Club, I give a net debit. Any price lower than the net debit at the same strike and expiration will put you in a trade with a lower risk and higher potential profit. So this was an example trade from when we launched Knoxville Trade Club. This was a real ticker, ANY. It was to buy 100 shares of ANY and sell one $5.50 call for November 5th, a net debit of $5.35 a share, potential profit of 15 cents a share if ANY is above $5.50 by November 5th, which represented a 2.8% return in 7 days. Now, the cost to enter the trade was called the net cost basis, net debit and the net cost basis. All right. This trade worked out to the event, to the good, as we'll see in the track record in just a few minutes. Now, if you get filled at the recommended price of 50, the 535, the maximum profit you can get for 100 shares and one short call is $15 for the week. Even if ANY went to $100 a share, the maximum profit is $15 a share, or it's $15 period on the whole trade. On 100 shares, 15 cents a piece. Now, if you get filled at a price less than 535, you have potential to make more than $15 on the whole entire 100 shares. But a price greater than 535 you would be, the max possible profit would be less than $15. Everybody kind of getting this process here? So, any questions on this thing right here? All right. Did that with AMC and sold 7 calls and sent over 50. Yeah. I'm still holding my AMC. I actually have, I bought shares at 15, I think it was 14. And I'm still selling weekly calls against it. This week I had $38 short calls. All righty. Yeah, so so with that agreed upon strike price, Dave asked if the option buyer really wants those shares, and even if the shares are below the $10, could he still buy it at $10? Yeah, if he executes the contract is for the strike price. So if he, even if it's at $9 a share, and he clicks the button to exercise his call option, he's going to buy our shares at $10 a share. He's going to give us $10 a share. It doesn't matter what the current trade price is. If it's $11, we're still going to get $10 a share. If it's down to $2, we're still going to get $10 a share if somebody executes that call. All right. So in Knoxville Trade Club, we tend to look for in the money calls. That's, like I said, it provides us a downside protection. Now, I have a whole video on YouTube about this. Let's pop out of here real quick, jump over to jeffreytrader.com/YouTube. If you're watching on YouTube, you can watch this later. You can, we're live on YouTube right now with this. So you pop down in here and we roll through this SAVA 1 week trade right here. That one right there. That trade shows an awesome example of how this works. The stock dropped 17% in 1 week. And we, during that time, we were still in the beta test period, and we rocked it out and made a nice big fat win, even with the stock dropping 17%. Now, here's the track record. We can look down in here. See, SAVA is right there. So we had bought 100 shares at $60.62. We sold one September 3rd call at a $45 strike and got paid $18.27. That 1 week trade with 100 shares worked out to $265 profit when it got called away. So I mentioned we would look at the one loss was right there. This covered call bought 200 shares of SPRT, sold the calls. It went through some kind of strange merger thing, and we ended up with a weird number of, I guess, 23 shares and some non-standard options, and I closed it for a $2,200 loss. But right before that, I traded the same SPRT right here and had a $4,500 win. So gave a little bit of that win back. Do have some open trades. The current We've currently closed 30 trades from the start of the beta period in July. 29 of those are wins, 1 loss, 8 are currently open. The closed profit and loss is 53.64.45. All right. So everybody was here to get the pick of the week, right? Everyone wants to know, what's the pick of the week? Let's go ahead and jump into that. All right. Where do I keep it? It's for KTC. Knoxville Trade Club is linked. It's pinned to the top of the platinum channel because that's the platinum record. I don't actually keep a separate record for gold and silver. So AVXL is the pick of the week this week. Now, it does have unusually high implied volatility. We were looking for any kind of drug news. We like to skip stocks that have earnings coming up or drug news or anything like that. If you're familiar with what's going on with AVXL right now, I'm all ears. But after digging a little bit, I could not find anything. It is beat up a little bit this week. Trading looks like it's trading almost flat right now. So first thing you do, this is think or swim right here. You want to put your platform into covered stock. Now I was going to fly out to next Friday, January 7th, 2022. Already in the last day of the year. I'm going to pop in here. Now that's way too many. Even though this is a simulated trading day, account, really, I'm going to look at buying 100 shares, selling 1 call right there. $16 call. We're in the money by about 10%. This means we have 10% downside. The stock can drop about 10%. We're still just fine in the trade. Looks like right now, mid price is 15.17. A few of my members, looks like Mark got a 15.11 fill. I think Beth earlier got a 15.02 fill. I don't remember what fill I got. So you put it on something like this. I know at 15.17. Let's see. Right here, 15.17. I believe. Let me pull that up real quick and verify. In the Knoxville Trade Club. Yeah, at a debit of 15.17 per share, that's a 5.5% return in 7 days. So right there, if you got filled, so far no fill, but right there, that price gets you a 5.5% return. Now, you might be saying, how does that work? How does 5.5% return work, right? So we just agreed to sell the shares for 16, right? And at a 15.17 cost, so we divide, that gets you 1.054, basically 1.055, if you rounded that up right there, round it off. So the trade was AVXL, it's right there, $16. The trade right on the screen, we can pop over the monitor. Field or working orders right there. Right here it is. Trying to do it for 1,000 shares. Let's replace that order. Down to 1. There we go. 1. Can't see my screen that way. Let me see if I can do a screenshot and then zoom it up for you. See where that go. Did not go anywhere. Try it one more time. I'm trying to zoom it up for you. Right there, you can see it. AVXL Alpha Victor X-Ray Lima. buy 100 shares, sell 1 January 7th, 2022, $16 call for a net debit between buying the shares and selling the call at 15, 16 or less. How do you choose a strike? This strike was roughly 10% of the money. I'll show you a little trick here in just a second. Give away a little bit more of the secret sauce. All right. I got a couple more trades we're going to talk about too. Now, why AVXL? Well, first off, it had that super nice premium for the week. Next, look at this chart. It's been volatile, but it's sitting roughly at the bottom of this range it's had. And we kind of got these bottom tails right here, except for this little diversion for 2 days here. When it came down and right back up. Now 16 is down here below all of that. 16 is right in here. We got nothing down there for the last several months. Nothing. We haven't been that low for a long time. If all the way back to June, last time we were that low. Does it mean it can't go that low? Well, sure, it can go that low. But the current, there's a lot of support right here at this area. I mean, it's hung there from, look at that, all of September, all of October, had a little diversion up, right back down, bounce back up, bounce back down, bounce back up, bounce back, just keeps bouncing right off this area. And it's been going for a while here. Even if we come down just a little bit more, we're still way down here at 16, agreeing to sell our shares. All right. Now, we pop back up the calculator. So we just agreed, I just agreed to sell them for $16 a share. And we had let's say we got filled at the recommended price that I put out in the Knoxville Trade Club Platinum was $15.17 earlier before I got on here. That'd be 83 cents a share. Multiply that by 100 shares. So the profit for the week is $83. How do you manage? We talked about that briefly during the little mini, I only gave you one masterclass out of the 5. So say that it's below 16 next Friday. Well, I let the call expire, and then I look to sell a call somewhere above 15.17 or right at 15 if I can get enough premium to drop my cost below 15. I may have to jump out 2 or 3 weeks. It may have to jump out a month. One of the ones we have open right now, I have February calls sold against it because there's just not that much premium for January right now. It's just going to take a little while to work that one back out. So that's the long and the short of it. This gives you downside protection, an $83 capped maximum profit. Even if this thing runs to 25, you're still going to only make 83 bucks on 100 shares. All right. So I look at this as kind of like, I have some money sitting in a savings account. I wanted to make some extra return on it. So I brought that $10,000 over, put it in this strategy right here, and I make more return in a week. I think 5.5%. If anybody's making that on a savings account, let me know. But right now, it's been an incredibly high win rate, and it just keeps chunking money each week. So, all right. So, and we're not going to change anything in this. I mean, I'm not looking to change anything. This thing just keeps on chugging out at the win rate, and it just keeps working. And I think, that track record I showed you with the $5,300 profit, that includes the loss in there. That's on a $10,000 account that was started in July. So I'm not looking to change anything on how I do it. You may think you got a better way. You may think you got something different. That's not what the Knoxville Trade Club's about. So, You can do it. You can change anything you want to change about it. This is the way it works though. For this is a different trade style, different little thing, just making a little bit of money. It's not big. It's not, we're not trying to take advantage of rises in the shares. We're only just trying to skim a little bit of money off. Now, where this comes from is the fact that options have started being traded on a larger dollar for dollar scale than the actual stocks. And there's a lot of premium. And these ones we go for are ones that have high implied volatility, high call skew. What's called a call skew. That means there's more calls being traded than there are puts. That means traders are in general betting that this stock is going to go higher more than they are that it's going to go lower. So somebody out there for some reason thinks this is going to go up. And this is why we're attracted to the ones the ones we go to. So that's where I used some scanners and found AVXL today with that premium. Now I'll give you a little preview of a place that you can use for free. You don't even have to, they do offer a subscription and they offer whatever, but I've used this site for a long, long time, but I've never paid for anything from the site. So if you go to borntosell.com, you pop this up, you pop up search, has a handy dandy tool. We can go out 1 week right here. You can say, I want to be 10% in the money, so I have downside protection. And then you can look at different sectors in here. Look, AVXL pops up on the list right here, right on the front page. Some of the other ones in here, basic materials, you can get 0.5% return for the week. Conglomerates, there are none offering any kind of return. Consumer goods, and some financial, some healthcare stuff. I'm surprised SAVA is not on there this week. It's almost always been on there. Industrial goods, you got space. MARA is on the list this week under services. And I tend to avoid those. If we pop back to services there, BBBY, Bed Bath Beyond, they have earnings coming up on the 6th. They offer a high return, but that's a high risk right there, especially for a company that's being on. So, all right. Technology, here's a few. And then no utilities. All right, so that's kind of a preview there. You can go 20% of the money, up to 20% of the money on this tool, or you can go out of the money if you're looking for upside calls. It's just a handy dandy little thing that's out here, a tool. It's free to use. It gives you a couple picks. I mean, if you wanted to subscribe, you could get additional things, additional lists. Like I said, I've never subscribed. It's just free to use. Gives you basic information. There's more information if you subscribe. I don't know. I don't get anything if you use it or don't use it. I'm not associated with these guys. I don't know anything about them. But this tool is a handy dandy thing. But then I go ahead and do other research and check myself. It's just a starting point for me usually. All right. Now, a couple other ones I want to talk about today before we part ways. SU. This is a market roadmap watch list from 2 weeks back. It does have the entry, the long entry right here. So what I would look for on this one, since it's more of a long-term play, this would be my pick of the month for Knoxville Trade Club Silver. I'm actually going to do 2 different ones this month, since I was late on doing this for everybody. We're going to fly out here about this far. We're going to look at some premium. Let's see, we're at $25 a share. So roughly, we're going to have to go right around here. Now this one, since it's in an established uptrend, we're not going to get paid nearly as much money as some of these other ones. It's a slow mover too. So we're going to be looking for net debit. There's a 24.50 strike. Yeah, 24.50. So right at this 23.94 So we're right at the mid there. All right, looks like I got filled on the other one. All right, so pop that up so everybody can see it. New. Make it bigger. Right there. And Thinkorswim, I'll show you a little tool inside Thinkorswim that shows you you can't exactly get call skew out of Thinkorswim. You can get a put to call ratio is what they give you. A little different. Yeah, without messing up, I basically have 100% win rate. It's not a return, but I might come out of the year in July. We can check back. I might get 100% return for the year. My goal has been about 8% a month. And if you do the compound math, that does come out more than 100%. I even had a pretty major boo-boo. The boo-boo I did was pretty major, I think, and I'm still, on track. So let's see if here's 8% compounded. If you started with a $5,000 balance on the right over here, 24 months gets you that kind, 500% return, same return for 10,000. So profit for the month after 2 years of doing this could potentially be $46.97 on a $10,000 account. On a $5,000 starting account could potentially be $23.48 a month. That's if you are able to maintain the 8% a month. And right now we're somewhere in this range. All right. Now, there's no more beta of this anymore. This is a launch thing. Knoxville Trade Club Platinum is the real thing. So, all right. So SU, that's going to be my pick of the month for one, and then we're going to go through one more here. I'm going to give you a double pick of the month. These are longer term. It was out to the monthly expiration in January. So the other one that I want to look at, like I said, this is kind of an uptrend right there. Establishing does have the possibility of a breakout. You could sell the 25, you could sell the 26, you could go with an upside. I'm not saying that. Yeah, so platinum, we do have up to 2 to 3 trades a week. Right, the last two, like right in this holiday period, has been a little slow. It was better before the holidays here. We'll get back into some moving markets here soon. So the other one I brought along with me today to talk about was this one right here. This is another market roadmap setup with a bullish setup right here in the same kind of price range. So this one, I'm thinking about probably a $24 call out to January. So pop over here, we type her in. Now, some other platforms like E-Trade, you have to add 100 shares to your to the order first, and then you add a call and sell that call against it. You make sure you sell it, not buy the call. So you want your cost to match my kind of debit price. So this one right here, I was talking about the 24. Yeah, that one, it's got a healthy potential premium, in there. Not super awesome, but it's for a nice slow gain. Looks like a reasonable place to be. Let's go ahead and knock that down to 1. Confirm and send. I got filled on the SU. And just got filled on the M, Macy's. All right, so let's go ahead and take a screenshot of that one and zoom it up so everybody can see it. This is the third trade I'm throwing out here in this open house party, last day of the year. So right here. All right. Any questions on that one? So that one's out there. I'll throw it into the Knoxville Trade Club as soon as I get off of here. Throw it out there with the recommended prices. Now, pop back over here. And the pick of the week. Already did that one. Let's duplicate the slide. And I'll give you a link. If you're interested in what I've done here today, what I've talked about, you know, this is not my only thing. This is just another thing I do. So right here, jeffreytrader.com/open house. If you are interested in coming to join this thing, get in on the Knoxville Trade Club. That's okay. You can't do the math fast enough. I break it down all for you in Discord, and I'll help you work through it. It's not like these aren't super fast things you have to do. I did have these kind of pre-planned out a little bit. I had notes over here you can't see. So do I ever trade forward? Not very often. That's not been on my watch list much, but I do occasionally look at it when people talk to me about it. So that right there, jeffreytrader.com/open house. Now, another, we did offer another thing this week. If you're interested in all the different things I do, jeffreytrader.com/premium, you can get 1 year of all my top services for a nice, probably, I think 25% discount, and you get access to this brand new alert bot that I created for a special IWM gap trade. It is a day trade. If only available to premium subscription holders. You have to be a member of all the major programs, and you get access to this IWM trade alert bot. If you're interested in that, check out jeffreytrader.com/premium or call 855-454-0816. David Gilmore's in the chat right here. He is my right-hand sales guy. You can call him, add whatever you need to add. If you've already got some stuff, he'll get you hooked up today. So in the money options on Bitcoin, I don't sell Bitcoin futures. Options are not available to me right now in any of my accounts. So I don't actually sell any futures contracts on them. I don't go with any crypto brokers that have the right options that aren't inside the CBOE. So all three trades were there, man. AVXL, SU, and M. That's the three for the week right there. If I could zoom it up any right there, I would. Screenshot it and zoom it up for you. Give us a shout. Hook us up. You know, we'll hook you up. Anything you're missing today, 855-454-0816. Right there in the chat from David to everybody. If you need something. Just a soft pitch. We're having an open party here the last day of the month. Just wanted to throw out some trades for everybody. I got fills in this paper trade account, so you should be able to get fills in the real money accounts too. All right. Happy New Year, everybody. See you again. See you next year. I've got market roadmap reports coming out on Sunday. I got crypto power plays reports coming out on Sunday. So I got lots of content coming out this weekend. And if you're in Discord, I'll keep up with all the crypto changes over the weekend as usual. So thank you all for being subscribers this year. See you in 2022. Thanks, everybody. It's been fun.